In business, numbers reveal a company's health. Financial statements act as a window into how well a company is performing, and they often tell a story that goes beyond just profits and losses. First Brands recently reported losses, meaning its expenses outpaced its income for a period. This can be concerning, especially for investors and employees who look to these numbers for signs of stability. However, this isn't unusual. Even strong companies face setbacks due to investments, rising costs, or shifting demand. Sometimes, companies spend more to innovate or expand, which can temporarily impact their bottom line. For First Brands, the reasons are complex, but the key point is that expenses temporarily overtook income. This could be due to higher raw material costs, increased marketing, or strategic investments in new products. Losses make headlines and spark questions about a company's future. The media often focuses on these moments, raising concerns and prompting deeper analysis. But a single loss doesn't mean failure. Many successful companies have faced similar moments, especially during growth or change. In fact, setbacks can be a natural part of evolving in a competitive market. What matters is how the company responds. Leadership's ability to adapt, communicate, and implement a recovery plan is crucial. Is this a one-time dip or a sign of deeper trouble? Analysts look for patterns and context to understand the bigger picture. Does First Brands have the resources and a plan to recover? Access to capital, a strong team, and a clear vision are all important factors. These are the questions investors and experts ask. They want to know if the company can weather the storm and return to growth. The loss is just one chapter in First Brands' story. Every company's journey includes ups and downs, and context is key. To understand its significance, we need to look beyond the headline. Digging deeper reveals the company's strategy and long-term vision. The real story is about resilience and strategy, how First Brands learns, adapts, and positions itself for future success. When financial losses strike, it's natural for investors and the public to worry. That's when experts like Jefferies step in to assess the situation and provide much-needed clarity. Their role is to look beyond the headlines and dig into the real numbers, offering a grounded perspective on what's actually happening. Jefferies, a respected investment bank with decades of experience, specializes in analyzing companies' financial health. Their insights often influence market confidence and help guide investor decisions during uncertain times. So, what's their take on First Brands? After a thorough review, Jefferies believes the company is well positioned to absorb these losses without jeopardizing its future. In other words, First Brands has the financial strength and resilience needed to weather this temporary setback and continue operating smoothly. Jefferies analysts have carefully reviewed the company's cash reserves, debt obligations, and valuable assets. They've looked at liquidity, solvency, and the company's ability to generate future profits. Their conclusion is clear. First Brands is built to handle rough patches, much like a sturdy ship riding out a storm at sea. The loss isn't a crisis, but rather a manageable event that the company is prepared to face. It's a bump in the road, not a dead end. Jefferies' message is clear and reassuring. It calms investors and signals that there's no need to panic or make rash decisions. Their expert view shifts the focus away from the loss itself and instead highlights the company's ability to recover and move forward with confidence. This perspective is crucial for maintaining long-term stability and ensuring that short-term setbacks don't overshadow the bigger picture. It encourages a more balanced, less emotional response from investors and stakeholders, helping everyone stay focused on the fundamentals. Ultimately, the real question isn't about the loss itself, but about the company's underlying strength and its ability to keep moving forward, even in challenging times. Companies aren't powerless in the face of losses. First, they use cash reserves, savings set aside for tough times. Next, they cut costs, trimming non-essential spending to stay lean. If needed, they raise new funds by borrowing or issuing stock. Most importantly, they focus on boosting sales and strengthening core operations. For First Brands, this could mean new contracts or product improvements. By combining these strategies, companies can recover and return to profitability. Losses are a challenge, but not the end of the story. Smart management turns setbacks into comebacks. Company losses affect more than just the bottom line. When a business faces financial setbacks, the impact can be felt far and wide, touching people and organizations in ways that aren't always obvious at first glance. Investors may see stock values dip, which can be unsettling, especially for those who have put their trust and savings into the company. but expert reassurance from Jefferies and other financial advisors can prevent panic selling and help investors make informed decisions, even in turbulent times. Employees worry about job security, wondering if layoffs or restructuring might be on the horizon. However, a stable outlook and clear communication from leadership helps maintain morale and keeps teams focused on moving forward together. Suppliers and partners rely on First Brand's stability for their own businesses. When a major client faces trouble, it can create uncertainty throughout the supply chain, affecting jobs and contracts beyond the company itself. Even the general public is impacted. Many people's retirement funds and pensions are tied to companies like First Brands, meaning that fluctuations in the company's fortunes can influence personal financial security for countless families. Understanding these dynamics builds financial literacy, helping people of all ages make smarter choices about saving, investing, and planning for the future. It shows that business is full of ups and downs, and that every challenge is also an opportunity to learn and adapt. Expert analysis helps everyone see beyond the headlines, providing context and clarity so we can better understand what's really happening in the market. The real lesson: resilience and smart strategy matter most. Companies that adapt and learn from setbacks often emerge stronger, inspiring others to do the same. Whether you're an investor, employee, or just curious, these stories shape our economic world and remind us that we're all connected by the ripple effects of business decisions. Analysts like Jefferies act as risk assessors, looking beyond a single loss. They check liquidity, how easily a company can pay its bills, and debt levels. A company with strong cash flow and manageable debt is less risky. They also assess the business model. Is it essential? Does it have a loyal customer base? Leadership matters too. Experienced managers inspire confidence. Jefferies' positive outlook on First Brands reflects more than just numbers. It's about financial strength, market position, and management's ability to adapt. That's why, despite losses, experts see a path forward for First Brands.